Big news for seniors and retirees. The IRS is implementing a new filing rule starting today that could reshape how you manage your taxes this year. This isn't just a small tweak. It's a significant update that may affect your eligibility for certain credits, the way your income is reported, and even how quickly you receive refunds. If you depend on Social Security, pensions, or retirement savings, understanding this change is crucial to avoid surprises. In this video, we'll walk you through the details of the new IRS regulation, explaining who it impacts and what actions you need to take. You'll get clear, straightforward guidance on navigating these changes so you can file accurately and confidently. This update could alter deadlines, forms, or documentation requirements, so staying informed is more important than ever. Don't let confusion or misinformation slow you down this tax season. By watching, you'll be equipped with the knowledge to protect your finances and avoid costly errors. Whether you file independently or with assistance, these insights will empower you to make smarter decisions with your tax return. If securing your financial well-being and staying up to date with IRS rules matters to you, hit that like button now. Your support helps us continue delivering valuable content designed specifically for seniors and retirees navigating today's complex tax landscape. Let's dive in and get you prepared. So, the IRS has just introduced a new filing rule starting today, and if you're a senior or retiree, this change could have a significant impact on how you handle your taxes this year. I know taxes can already feel complicated, and the last thing you want is to be blindsided by a new regulation that might delay your refund or create confusion. That's why it's so important to get ahead of this and understand what's happening before you file. Let's begin by unpacking exactly what this new rule is all about. The IRS is tightening the way certain income sources are reported, particularly those common among retirees, things like Social Security benefits, pensions, and retirement account distributions. In past years, many of these income streams were treated in a more straightforward manner, but now the IRS is requiring additional documentation and more detailed reporting. This is designed to close loopholes and prevent errors, but it also means that if you're not prepared, you could face delays or even audits. One key change is related to the way the IRS verifies your income information before processing your return. They're implementing a more rigorous cross-check system, so the data you submit has to perfectly match the records they hold. If there's any discrepancy, even something as minor as a missing digit or a slight difference in reported amounts, it can trigger a hold on your return. For seniors who rely on timely refunds, perhaps to cover essential expenses like medications or utilities, this is something to take seriously. Another important aspect is the documentation requirement. The IRS now expects you to provide more thorough proof of your income sources. If you're receiving Social Security benefits, you may need to submit additional forms or statements that confirm exactly how much you received during the tax year. For pension income or IRA withdrawals, similar documentation might be required. If you don't have these documents on hand, or if they don't match what you report on your tax return, your filing could be flagged for review. Now, if you typically use a tax preparer or accountant, these professionals should already be aware of the change and equipped to help you navigate it. But if you file on your own or with minimal assistance, it's critical that you educate yourself on these new requirements. Missing or incorrect documentation can result in rejected returns, delayed refunds, or worse, penalties. And none of us want to deal with those headaches. This new filing rule also affects how certain tax credits are claimed. Some seniors qualify for credits such as the Retirement Savings Contributions Credit or the credit for the elderly or disabled. The IRS is now scrutinizing these claims more closely, which means you'll need to provide accurate income figures and supporting paperwork to back up your eligibility. If your documentation isn't solid, your claim could be denied, leaving you without a credit you were expecting. One change that many seniors might find beneficial, however, is a clarification on deductions related to medical expenses. The IRS has updated guidance on how to calculate and report these deductions, which could result in larger deductions and potentially lower your tax burden. This is great news for retirees facing high healthcare costs, but it also means that you need to keep detailed records of your medical bills, prescriptions, and related expenses throughout the year to take full advantage. Speaking of record keeping, this is a great opportunity to remind everyone just how crucial it is to maintain organized, accessible files. If you've been shuffling papers or relying on memory, now's the time to get everything in order. Having your Social Security statements, pension letters, 1099 forms, and medical receipts all in one place will make filing smoother and reduce the risk of mistakes. Another important change comes in how you report income from investments or part-time work, which some retirees engage in to supplement their income. The IRS is putting extra emphasis on matching reported income with third-party data, such as broker statements and employer filings. If you've earned dividends, interest, or had any self-employment income, you'll want to make sure everything is accurately reported and well documented. Underreporting or missing information can lead to audits or penalties. Let's talk briefly about how these changes might affect your refund timeline. Because the IRS is adding extra verification steps, the processing time for tax returns could be longer than usual this year. Seniors who rely on their refund to pay for important expenses should be prepared for this possibility. To help speed things along, consider e-filing your return with direct deposit information included. This remains the fastest and safest way to get your refund once approved. Now, if you receive Social Security benefits but do not usually file a tax return because your income is below the filing threshold, this new rule might change that. The IRS is encouraging some seniors who previously didn't file to submit returns to confirm their income details and ensure eligibility for benefits and credits. Even if you don't owe taxes, filing could be beneficial for confirming your records with the IRS and avoiding potential issues down the road. One practical tip is to start gathering your tax documents early this year. Don't wait until the last minute to pull together your statements and forms. Request any missing documents from the Social Security Administration, your pension provider, or financial institutions as soon as possible. Early preparation will give you time to resolve any discrepancies or questions before the filing deadline. Also, be cautious about any correspondence you receive from the IRS related to this new filing rule. The IRS may send letters requesting additional information or verification. Respond promptly and thoroughly, and keep copies of all communications. If you're unsure about any letter or request, seek advice from a trusted tax professional rather than trying to handle it alone. For those using tax software, check that your chosen program is updated to handle these new IRS requirements. Most major software providers have released updates to comply with the new rule, but it's worth verifying before you begin your filing. Sometimes older versions or unsupported programs may not capture all the necessary changes, which could lead to errors. Now, I know this might sound overwhelming, but remember, the goal of these IRS changes is to improve accuracy and fairness in the tax system. By making sure everyone reports income correctly and provides proper documentation, the IRS is working to protect taxpayers and prevent fraud. So while the process might feel more complicated this year, the better your preparation, the smoother it will go. If you don't feel comfortable handling these new requirements on your own, consider reaching out to local resources that specialize in assisting seniors. Many community centers, libraries, and nonprofit organizations offer free or low-cost tax help, especially for retirees. These programs can provide guidance and support to ensure your filing is accurate and complete. It's also a good idea to keep an eye on IRS announcements and updates throughout the tax season. The IRS website is the best source for official information. Avoid relying on hearsay or social media rumors, as misinformation can cause unnecessary worry or mistakes. Before we wrap up this section, let's discuss some common questions seniors have about this new IRS rule. One frequent concern is whether the changes will increase the amount of tax owed. The answer varies depending on your situation. For some, the changes might mean more paperwork, but no additional tax liability. For others, especially those who haven't reported all income fully in the past, it could result in owing more taxes or facing penalties. This is why accuracy and honesty in reporting are more important than ever. Another question is about how this rule affects estate taxes or inheritances. Generally, the new filing requirements focus on income reporting for current tax years and don't directly change estate tax rules. However, if you received distributions from an inherited IRA or pension, you'll want to ensure those are reported correctly under the new guidance. Many retirees also wonder if this new rule impacts the tax treatment of Social Security benefits themselves. Social Security income is only taxable above certain income thresholds, and those thresholds remain unchanged. What has changed is the IRS's method of verifying income, so your benefits will be scrutinized more closely, but the underlying rules haven't shifted. Now, let's consider how these filing changes might influence your financial planning for next year. Being aware of what counts as taxable income and what documentation you need will help you plan distributions, investments, or any additional earnings more strategically. Consulting with a financial advisor or tax professional now can help you optimize your tax situation moving forward. And if you're feeling stressed about all these changes, remember you're not alone. Taxes can be confusing at any age, and these new rules add another layer. But with careful preparation and the right help, you can navigate this tax season confidently and come out on the other side with your finances intact. Lastly, while this new IRS filing rule is significant, don't forget that tax laws and regulations continue to evolve. It's wise to stay informed year-round, not just at tax time. Signing up for IRS newsletters or following trusted financial advisors can keep you up to date on any future changes that might affect your retirement income or tax filing. Now that we've covered the main aspects of the new IRS filing rule, let's take a moment to consider how this might affect your overall peace of mind this tax season. It's completely natural to feel a bit overwhelmed when rules change, especially with something as important as your taxes. But the key is preparation and understanding. One of the first steps you can take to reduce stress is to organize your paperwork well before you start the filing process. Gather all your income statements, whether they're Social Security forms, pension statements, or 1099s from investments or part-time work, and keep them in one folder or digital file. If you use a tax preparer, bringing everything neatly organized can save you time and potentially money too. If you're someone who files taxes yourself, consider taking advantage of the many resources designed specifically for seniors and retirees. The IRS offers free webinars and phone support tailored to older taxpayers, which can help clarify confusing points about this new filing rule. Local libraries or community centers often host free tax preparation workshops as well. Don't hesitate to seek these out. Getting expert guidance early can prevent costly mistakes or delays. Another way to simplify your tax situation is to review your financial activities over the past year. Did you take any early withdrawals from your retirement accounts? Did you start or stop receiving any new income streams? Changes like these can affect how you file and what you owe. The IRS's updated rule means they're watching these details more closely than ever, so double-checking your records against your official statements is critical. Let's also talk about the importance of timing. The IRS is known to process returns on a first-come, first-served basis, but with the extra verification steps in place this year, filing as early as possible can help avoid a backlog. Many seniors wait until the last minute to file because they're waiting on documents or just feeling unsure. Try to avoid that if you can. The sooner you file, the sooner you'll receive your refund or confirmation that everything is in order. In addition to timing, be mindful of deadlines. The tax filing deadline remains April 15th this year, but if you need extra time, filing for an extension is an option. Keep in mind that an extension gives you more time to submit your paperwork but doesn't extend the deadline for paying any taxes owed. So if you anticipate owing taxes, it's best to estimate and pay what you can by the deadline to avoid penalties. For seniors who are not familiar with tax jargon or forms, the new filing rule might feel like a language barrier. Terms like adjusted gross income, tax credits, and deductions can be confusing. That's why this video aims to break down these concepts in plain language. If you find any terms unclear while you're preparing your return, don't hesitate to look up simple explanations or ask for help. There are many user-friendly guides online and community programs designed to assist older adults. Now let's focus a little on what to do if you run into trouble. Say you've submitted your return, but the IRS contacts you asking for additional documentation or to clarify something. It's important not to ignore these notices. Respond promptly and thoroughly. Keep copies of everything you send and receive. If you need help responding, consult a tax professional or a trusted family member who understands these matters. On the other hand, if you find discrepancies or errors in your own records, it's better to address them before filing. For example, if your Social Security statement shows different income than what you plan to report, request a corrected statement. Taking care of these issues up front will reduce the chances of delays or audits later. Let's also address the potential for scams during tax season, especially with all these changes. Fraudsters often target seniors with fake IRS calls, emails, or letters claiming there's a problem with your return or demanding payment. Remember, the IRS will never call you unsolicited asking for money or sensitive information. Always verify any communication directly through official IRS channels. If you get a suspicious call or message, report it to the IRS immediately. Another area to consider is how this new filing rule might affect your estate planning or financial legacy. While the rule primarily focuses on income reporting, any delays or changes in your tax filings could impact timing for estate matters or financial assistance programs for your heirs. Keeping your tax and financial documents organized benefits not only you, but also those you trust to handle your affairs in the future. Let's talk briefly about the emotional side of all this. Taxes can be a source of stress, especially if you're on a fixed income or managing health concerns. It's okay to acknowledge that this process isn't always easy. Seeking help is a sign of strength, not weakness. Reach out to trusted professionals, family members, or senior support organizations if you feel overwhelmed. Finally, remember this tax season is just one part of your overall financial journey. The new IRS filing rule may require more attention this year, but it also presents an opportunity to take stock of your finances, update your records, and set yourself up for smoother filings in the future. With the right preparation and support, you can face these changes confidently and protect your financial health. As we've explored, this new IRS filing rule marks an important shift in how seniors and retirees handle their taxes. While change can be daunting, staying informed and prepared will make all the difference. By organizing your documents, understanding the updated requirements, and seeking help when needed, you're taking control of your financial future and protecting the hard-earned benefits you deserve. Remember, you don't have to face this alone. Whether through trusted tax professionals, community resources, or family support, there are people ready to guide you every step of the way. The key is to act early, stay vigilant, and never hesitate to ask questions. If you found this video helpful and want to keep receiving updates tailored specifically for seniors and retirees, please hit the like button and subscribe. Your support helps us continue providing clear, reliable information to help you navigate these important changes with confidence. Thank you so much for watching. Take care, stay safe, and we'll see you in the next video with more tips to empower your financial journey.